Jim mentions GE this morning, surging in the pre-market. The company, of course, agreeing to sell its biopharma business to Danaher for $21.4 billion, including $21 billion in cash. Deal's expected to close in 4Q. Larry Culp did issue a statement saying, quote, "Today's transaction is a pivotal milestone, demonstrates that we are executing on our strategy by taking thoughtful and deliberate action to reduce leverage and strengthen our balance sheet. A more focused portfolio is the right structure for GE, and we have many options for maximizing shareholder value along the way." David, you've been all over this today.
Well, a key here, I think, for people to be aware of is they're not going to be taking healthcare public anymore. Can you say never? No, but that's off the table for now. And that was something that was slated to occur later this year. Remember, an IPO of what might have actually been up to as much as 50% of the healthcare business. This deal, apparently there were a lot of inbound calls, including from Mr. Culp's former employer, so to speak, the company he ran, Danaher. Now, that's over 4 years ago. But they also, amongst others, inquired, and they ended up doing a deal. And there he is. He said to, actually, Jim and I both spoke to him this morning. He said to me, listen, the IPO of healthcare was plan A, but we got lots of inbound calls about this business, and this is clearly a superior path. You take in $21 billion, and again, what he also has to say about their debt load is very simple. We got too much debt. And so when they get the proceeds from this deal, they are going to pay down debt, take their leverage ratio down. And that is something that's being applauded this morning by investors who perhaps had not anticipated they'd be able to sell what is only 15% of the revenues at healthcare, and they're selling it at 7 times revenues. You may hear that and go, whoa. However, it is only 17 times EBITDA, so it's clearly a very profitable business, given only $3 billion in revenues, but a lot more profitability from that than you might otherwise expect, Jim. And as you said earlier, it seems to be a positive for both companies. Yes. Danaher getting a business that it is continuing to grow in. It will now have $10 billion in revenues in this particular portion of healthcare. Yes. And for GE, clearly a huge deleveraging opportunity, and now creating more optionality for them when it comes to healthcare, basically being able to keep the business other than this segment of it, and decide what they want to do over time, as opposed to feel as though they have to do an IPO in order, again, to address this leverage issue.
Yeah, the term win-win is often exaggerated and sounds like, other than the movie Win-Win, which was made in the neighboring high school district from where my kids grew up. The thing that you need to know about this Danaher deal, as David said, GE gets to keep the MRI business that we all associate with GE, which is tremendous service stream. At the same time, Danaher is basically doubling down on the fastest growing part of its business, which is biopharma, to compete basically with TMO, Thermo Fisher. Right. These are great companies. Now, Danaher recently spun off its pure, I would say, industrial business, and it's going with this high-growth biopharma. Now, this reminds me of the Pall acquisition, P-A-L-L. It is a great one for Danaher, so you're going to see that company up. It's 50 cents a year after in terms of accretion. Everyone's been waiting for Danaher, like Warren Buffett, to do a big deal. That's been Danaher's way. So there's tremendous joy there. Fortunately, my travel
and they've gotten out of the dental business.
Which is a tough
and they exited their industrial business.
They got out of
clearly focusing the portfolio.
Yeah, they got out of low multiple business. David, there's a particular date I want you to focus on.
Okay.
March 5th.
Yes.
What happens?
On March the 5th, I believe, Lawrence Culp will present at JP Morgan Aviation, Transportation, and Industrials Conference.
Could that threaten to be boring, or is there someone at JP Morgan that might be an interesting interlocutor?
Maybe Jamie Dimon?
Well, how about Steve Tusa?
Oh, yeah, Steve
Tusa. Steve Tusa will be running the Q&A. Steve's been a bit, let's say he's been critical of some of the ill-advised decisions made by pre-Culp.
He has.
So I think it's going to be maybe the most exciting analyst meeting in history, followed up by a March 7th teach-in about long-term health care, which, of course, has been the single biggest bugaboo that was not dealt with by previous administration.
And then on the 14th, they're going to have their Outlook conference call.
Right. So you've got...
But if you got a lot coming up to try to explain the story of GE.
Yes.
If you took a flyer on this name at 7, would you be getting out now?
No, I wouldn't, because I think if Culp had sold, and if he had done an IPO, and I know he had even gotten to the point of considering board members for the IPO, then I would say same old GE. Oh my, we got to, they sell some, then they'll sell the rest. They delay. No, the alacrity with which he's approached this is impressive.
Yeah.
And so I say, stay tuned, more to come. Take the balance sheet issues off the table between this and the March 7th meeting. Obviously, think about this. This is a man of great confidence. Would you really want to go in front of the judge, the jury, and the prosecutor that is Steve Tusa unless you were confident? And the answer is no, because he genuinely thinks, listen, we got a real shot here. When I spoke to him this morning, I wanted to talk about aerospace. I mean, this could be an aerospace company. Once you get rid of oil, which, by the way, I know the drilling companies still haven't come back.
But to the extent that you're able to reduce leverage with a purchase price here for something that was 15% of your revenue base in healthcare, you take a lot of pressure off.
Yes.
You take near-term pressure off, and then you're able to operate from a more, just a better approach to maximize value, whatever it might be.
Right.
So I think that's what certainly seems to be being embraced by shareholders who are sending the stock up 15% today, Jim. You know, by the way, Flannery apparently did get approached by DHR.
I know.
He was approached by Danaher. That's the previous CEO, of course, to Mr. Culp. And they didn't do a deal.
Danaher's wanted this business for a long time now. The old style, again, was just do the IPO. I point out that I think it also takes off the table the 100 million share equity offering that some of the shorts have been waiting for to cover.